being here. Today, we want to discuss the topic around DeFi. Where are we coming from? Where are we going to in the DeFi space? So not talking about Bitcoin, but rather talking about the entire DeFi ecosystem. And we have a couple of true experts here. Alexander Schreibmeier, he has been participant of our DeFi Talents program. I will explain this in a second later. Then we have Alex Zinder here from Ledger sitting in France right now. We have Rudi here from Bankhaus Scheich. He is replacing Niels because Niels unfortunately is stuck in a train right now with bad internet reception. So therefore Rudi is replacing him. And we have Daniel here from the Algorand Foundation sitting in Singapore. Excellent. Yeah, with this, let's directly jump into the topic. And I would like to ask everybody here to very briefly present himself, present his company, and maybe also his involvement in the domain around DeFi. Maybe one word about us. My name is Philipp Sandner. I'm head of the Blockchain Center in Frankfurt. And we have, for example, we have multiple initiatives, right? But today I would like to very briefly present our DeFi Talents program. It's an, let's call it a mentoring, a coaching program running over the course of 2-3 months. It's not lecturing, by the way, because we believe that lecturing can be done by everybody himself by watching YouTube. Yeah? So no lecturing necessarily required. YouTube is better here. But what YouTube is lacking is basically the interactive part, the discussion part, the part of getting to know other experts in the field. And that's basically what we try to do with the DeFi Talents program, with this kind of mentoring approach. And I think Bankhaus Scheich, represented by Rudi here today, is a very good example because within a couple of weeks, we have tried to fill close to 10 job offers created by the bank. Yeah, Bankhaus Scheich wanted to employ quite some people, and I think we helped them find quite a number of talents. And Alexander Schreibmeier today, also being here, has been one of the people in the program of DeFi Talents. We have 800 applicants per batch. That's basically 1,600 per year. And of these, we are taking 300, 400 talents, which we then try our best to educate them, coach them, mentor them, and putting them in touch with other experts. Having said this, I would like to now hand over to Alexander. Maybe please present yourself and your involvement in the DeFi space.
Hi everyone. I'm Alexander. I participated in the first DeFi Talents program batch that Philip, described just recently before. In my day job, I am currently a project manager for digital assets for a fintech called IF1 here in Frankfurt, Germany. We provide digital asset infrastructure for financial institutions such as banks or asset managers. So we are offering these service modules like crypto trading, tokenization, and DeFi services as well. Before I worked for IF1, I was a management consultant for 5 years for PricewaterhouseCoopers, where I specialized in the financial services industry with a focus on asset and wealth management. And I'm excited to be part of this panel and looking forward for a great discussion.
Excellent. Thanks for being here. And let's move over to Alex Zinder from Ledger. Please present yourself.
Hello, everybody. I'm Alex. I'm the head of Ledger Enterprise Solutions here at Ledger. I've been with the company for about a year. And prior to that, I spent most of my career in New York working for NASDAQ, primarily in financial services technologies, implementing exchanges on a global scale. I ran my own advisory firm for quite some time before taking the deep dive into crypto, and really looking forward into our discussion around DeFi today.
Perfect. Let's jump directly to the next person, Daniel in Singapore. Would you like to also present yourself briefly?
Yeah. Hi, everyone. I'm Daniel Un. I'm the head of DeFi at the Algorand Foundation. I help with the adoption and growth of DeFi on Algorand, actually. So very quickly sharing about Algorand. Algorand is a pure proof of stake blockchain that's fast, carbon negative, and power smart contract. So on Algorand, you would find a vibrant ecosystem namely DeFi, which I'm helping to build. And you will also find NFTs as well as gaming, actually. So very happy to be here to share more about DeFi on Algorand with you guys. Yeah.
Yes, welcome. Welcome. And finally, we have Rudi here from Bankhaus Scheich. Please also present
Thank
yourself.
you, Philip. My name is Rudi Frangi. I'm an operation manager at Bankhaus Scheich Tradias. We mainly oversee middle back office and reporting department in the digital asset area. And we're also looking forward to our discussion today.
Perfect. Welcome, everybody. So let's jump directly into the discussion with a very easy question. So do you think, everybody here in the room, do you think that the growth in DeFi will continue? Do you think it will slow down a little bit? Do you think it will accelerate through the rest of the year and maybe next year? Who wants to give it a trial and have a first answer on this question? Where do we grow from here? Alexander, would you like to get started?
Yeah, sure. Sure. I think this is a great question that every one of us is asking ourselves. I think before I give an outright answer, I think there's just a couple of factors that you would have to consider. I think there are a couple of bullish factors here and a couple of bearish factors. Regarding the bullish factors, I think the planned transition to really ETH 2.0, which is supposed to happen later this year if everything goes smooth. I think this would be a huge boost for the DeFi community in general. From my experience, there's a lot of concern, for example, from institutions regarding the energy consumption, which is associated with all the proof of work blockchains, right? And so, the transition to ETH2 could be a big boost regarding the ESG considerations. But also, I think on average, we are already seeing some lower transaction costs as well, right? With the proof of stake blockchains that we're seeing out there, like the alternative solutions, alternative blockchains like Solana, Avalanche, and so on. I think this will also contribute to acceleration of the adoption. Hopefully we're also going to see some Web3 wallets, right, which are emerging, which are really offering a better user experience and a better UI for retail users, right? But when I look at the bearish factors, I think it's just currently that we have an investment sentiment, right, or investment environment, let's call it, which is not very good for tech in general, right? We're expecting the banks, the central banks around the world, to raise interest rates, and so we're always seeing that the tech is taking a big hit, right, when interest rates are rising. I think crypto will also be affected by this. And then another bearish factor, of course, would be regulation, right, that we're seeing in Europe. Especially just 3 weeks ago, I think it was the beginning of April, when it comes to the vote on the non-custodial wallets, right, and how transfers from or to those unhosted wallets will be regulated. I think this could also hurt growth for DeFi in general. But I think overall, I'm expecting for DeFi to continue its acceleration. Yeah, just looking at the bullish factors, I think they outweigh the cons and the bearish factors here.
Yeah,
I think yes, please go ahead, Alexander.
Yeah, I would definitely agree with that assessment. It's really nice. I like, Alexander, what you did with kind of the two bearish and bullish factors. But I think generally, from my vantage point, I'm very much bullish, right? I think the rate of growth continues to accelerate. The reason I feel like that is primarily because currently, majority of the capital that we see allocated in DeFi is around trading. And around liquidity provisions, which will continue to accelerate just generally based on the complexity and the diversity of the ecosystem as it continues to evolve, right? So as we add new networks, as we continue to evolve the different models for consensus building, the different capabilities, as we continue to add new use cases, like NFTs and tokenization. I think complexity of the ecosystem overall in crypto is going to continue to grow. And as complexity increases, the opportunity for trading and arbitrage and making markets more efficient is going to continue to grow exponentially, and we'll see additional capital being deployed in those aspects.
That's an interesting point, raising complexity. We will talk about this in a second. What about Daniel and Rudi? You want to add 2-3 points?
Yeah, for sure. So for DeFi, I think it's really interesting because this whole vertical has basically been developing for the past 2.5 years, actually, from the earlier days of synthetics, right? And then it's been developing for the whole time. Each time you would see a new wave of innovation that's being released by the developers themselves and also the builders themselves. So it's really an ebb and flow thing, it's like the waves on the beach. When it comes in, sometimes it comes in hard, and then sometimes the developers, they kind of pull back and actually reconsolidate whatever's happening. So I would really agree with what Alex has shared. I think that's really interesting because what happens is every time there's the consolidation that's going on, it helps to breed creativity and innovation that pushes us to the next level. And I think that's where for DeFi talents, where you guys shared about DeFi building blocks, that's important because you have the AMMs first, and then you start moving up the ladder. And then nowadays, for DeFi, there's really complex stuff. For example, like options trading, derivatives, etc. So I think it's gonna be interesting, and it's gonna keep growing over the next couple of years. Yeah.
Growing over the next couple of years. That was a very bold statement, and actually I would also agree here. But we see a higher complexity, as you have seen. So far, my personal opinion, and honestly, please challenge me, my opinion so far is that DeFi has primarily grown by individuals who are taking part in this technology, investing money and so on. And now speaking for Germany, we do not see much institutional money in the entire crypto sector, with Bitcoin, Ethereum, and DeFi. I might be wrong here, but that's my impression. Would you largely agree? Is it maybe different in Singapore? Is it different in the US?
Yeah. So maybe very quickly, I do agree that it's globally enterprises and kind of like financial institutions are kind of like waiting. They adopt a wait and see model, actually, because retail investors kind of understand that, when I enter into a project specifically, I know that's the risk. I know that, if I enter with X amount, there is this risk, there is the smart contract risk, there is the protocol risk, for example. But corporations and enterprises kind of like attack it differently. They have other considerations more than just individuals, actually. So we are looking at a stage where enterprises and financial institutions are definitely behind in terms of adoption, but we would see that grow very aggressively over the next couple of years as the infrastructure is being built, set up, and ready for acceptance, actually.
Yeah, that's an interesting point because, when I'm also talking to quite a number of companies, intermediaries out there, and actually you are right. The interest in this technology is huge, but very often, subsequently after this interest, not much is subsequently happening. It's not that basically the interest is huge and then you can compute a probability that these and that millions and billions are flowing into the system. There is some kind of hindering factor between the initial interest and then let's call it a purchasing discussion. Let's explore this later when we talk about hindering factors. What about scalability, Alex? Is scalability necessary? Is it achieved technically? Is it achieved by multiple layer ones? That's some kind of implicit scalability happening. What's your observation here?
And now I think scalability is critical, right? So as the ecosystem continues to develop, you need to have systems and platforms in place to be able to support that growth and that scale. The way we generally look at it from a Ledger Enterprise perspective is we try to track 3 different types of scale and complexity. So we have scale of value, right? So as we continue to add new networks, if we continue to attract new capital into DeFi and the general crypto ecosystem, the value obviously is growing exponentially, and that scale of value will attract a much more sophisticated malicious actor into the ecosystem. So you need to invest accordingly into the tooling and the security practices and the security security capabilities required to protect from those types of sophisticated malicious actors. We see this happening in the space now. Some of the newer protocols, newer DeFi applications and newer use cases are experiencing challenges with hacking, with assets being lost, and that obviously needs to be mitigated as a risk factor. The second dimension of scale is really around complexity, right? So as you increase the number of use cases, as you increase the number of ecosystems and networks that you support, you have to cover a much wider attack surface and much wider range of capabilities, both operationally, technically, and from a security perspective. And that becomes obviously very challenging. You have to invest quite a considerable amount of resources to keep up from an engineering perspective, from a process design perspective, as to how do you effectively govern all of these different operations, which is challenging. And we're seeing some trends in the industry where a lot of that is getting mutualized, right? And some of the vendors are able to then create platforms and create solutions that will solve for those types of challenges. And then the third dimension of scale that we really track is the scale of operations. And again, what's unique about the crypto ecosystem is, crypto never sleeps. You have 24/7 operating cycles. The chances that you have a very global user base, primarily because majority of the user base is currently retail, right? You need to be able to be in a position as an organization to support that 24-hour operating model, to follow the sun operations, the global presence with localized support. And these are all pain points that we work with from a Ledger Enterprise perspective with our client base to really start to increase institutional adoption and create the level of service that larger institutions are going to require to be able to participate in this space.
Yeah, excellent point. Again, you raised the point of complexity. We talk about this later. What about the institutional adoption, which has been proclaimed in many publications, like since years, we should have had quite a significant institutional adoption, but sometimes it's still waiting, right? Do you see this changing now? So what are, for example, demands by institutional clients? Maybe Rudi, can you, from the banking side, elaborate on this question a little bit?
Sure, thank you, Philip. Yeah, so from the banking side, there is definitely a very high interest in DeFi and enthusiasm. However, this is not reflected on a practical level. So the barriers to entry for financial institutions into DeFi are very high, especially that the standards, they do not meet the KYC AML standards. That's the first thing, which is a huge obstacle for institutions, KYC AML. And then we go into other obstacles ranging from security, accounting and reporting, filing for taxation, user friendliness. We can here also argue that DeFi, it's not the best user-friendly platforms that you could find, especially for institutions with trading desks. We can also mention the point of hacking, the hacking experience that we had so far on the DeFi level, and how could those experiences be overcome. So when we talk about financial institutions in digital assets or crypto, I think we have to segregate them into two, which are mainly taking either the CeFi road, which is decentralized finance, or the DeFi road. Those are two different target markets and two different types of financial institutions, which usually fall under those two. So, but definitely we believe that the advantages of DeFi should be tailored, or we should leverage them into the CeFi by creating a robust secondary market where all DeFi products can be traded in a robust functioning way, and making sure to combine the traditional expertise that we have with the innovation and creativity of DeFi.
Yeah, interesting. And I would like to directly pose the next question and then also open up, please, for everybody to add things here. Rudi, what types of clients come to you as a bank saying we would like to explore DeFi? Is it family offices? Is it individuals? Is it large-scale pensions fund? Is it, who knows, the government? Is it the European Central Bank maybe wanting to explore this? Who knows? Maybe what types of customers, what types of categories are there where interest is coming from?
Okay, so as an interest that was received mainly from hedge funds, family offices. There's some from wealth managers or asset managers, individuals as well, or high net worth individuals specifically concerning DeFi. That's mainly our type of clients which express interest, and they looked into those blockchain-based projects, and they were definitely looking forward to join some of them. But then the questions came about how this could be in terms of KYC, how could this be tackled, or AML, from a reporting perspective, how can this be fixed? From a security custody, which is a very important point that also I wanted to stress before. Custody in terms of DeFi, how can this be solved for financial institutions? Because usually custody services are something that financial institutions look upon on a very first level. Here also we can stress on something that was recently launched, the permission DeFi by Fireblock. And I think it's a good start to mix the traditional aspect and the DeFi aspect, especially in terms of KYC AML. With the permission DeFi that was launched by Fireblock, it's like a bubble. To enter this bubble, you have to fill very strict KYC AML forms. Once you're accepted, and you can trade all DeFi products. This way, you're able to trade in a very safe and secure environment. So I think the target clients or the target financial institutions which showed interest, as much as those types of mixtures between traditional and DeFi bridging takes place, the more they would like to transfer this interest into really practical actions and joining more DeFi.
Interesting. Alex, Zinder, Daniel, would you like to add something on institutional adoption? Whom are you talking to?
Yeah, no, absolutely. And some very interesting points there from Rudy. And it's super helpful to get the perspective from kind of the banking sector and the traditional institutional space. I think there was a study published in Bloomberg relatively recently that they observed that over 60% of the traditional financial players still think that security is one of the biggest challenges, right, in adoption of crypto and adoption of DeFi, which generally makes a lot of sense, right? I think security is paramount. It's critical to accommodate that, and I think directly from security comes custody, right? So you need to be able to manage your assets in a secure way, and you need to be able to guarantee to your clients and customers that those assets are properly custodied and there is no potential of total loss, which is a critical aspect. And that's really kind of the point of focus for Ledger Enterprise at this phase as the original, first threshold for somebody to overcome. Although I will throw out a little bit of a challenging statement out there. I think we need to start to think about distinguishing when we say institutional adoption, right? That needs to be distinguished because we actually see a very significant emergence of crypto native institutions that have scaled quite drastically. And this is really the audience that we support today, right? We have several regulated custodians that are crypto native custodians that are operating on our platform today. We see multiple exchanges that are now public companies operating on multi-billion-dollar valuations and multi-billion-dollar budgets that are also crypto native exchanges. Right, so those are by all standards today. These qualify as institutional players. Now, of course, from a market cap perspective, I think there's anywhere between 70 to 120 billion currently in DeFi today. Now, as that number starts to approach into the trillions, which I'm very confident that it will, you're kind of entering into this adoption versus disruption phase where the crypto native institutions per se, right, are now growing rapidly and having access to this DeFi market where the traditional institutions are still being blocked and in many cases by security risks and regulation. But once you create enough pressure from that perspective, I think the adoption rates will start to evolve. And to Rudy's point, I think some of these permissioned networks, or historically called walled gardens, will start to emerge within the new ecosystem. The role that we try to play in Ledger Enterprise as a technology provider, we're not really in the business of creating the actual walled gardens and the ecosystem, because our assumption is that there's going to be many of them built for purpose for a variety of different financial use cases on top of the DeFi ecosystem. And we want to be the tech provider into a wide range of these types of networks and use cases without having to construct them ourselves per se, right? So it's going to be the responsibility of the creators and managers of these networks to create these now regulated DeFi protocols, which we're actually seeing the emergence of quite a bit within staking, yield, and other aspects. So that is definitely coming.
Yeah, I have one follow-up question here, Alex, and what I'm now saying might be wrong, but it's an open question. We saw this in the Bitcoin space already, because in the Bitcoin space, we expected institutional adoption since 2-3 years, and not too much has happened, right? In comparison to what has been expected by many people, also by me, by the way, by many people. And therefore, I have the following feeling that you have, the ultimate owner of money can use an asset manager for asking his money to be invested, or he can withdraw the money from the asset manager and invest it directly as a private individual. So what do you think might happen in the area of institutional adoption? Some kind of solutions, like asset managers doing compliant DeFi, walled gardens, as you have said it, like an artificial DeFi world created for institutional intermediaries, compared to the other possibility of the world where the ultimate owner of money is withdrawing the money from the asset manager because he wants to have exposure to DeFi now, not in 2 years, and moving the money as an individual directly to some kind of crypto.com solution or whatever, where he can try to mirror DeFi products as close as possible. Is this possible? Is this a threat? Is this happening? Or is this, does it not make sense? Because then you create new risks for the owners of money, which you basically want to reduce through asset managers. What's your opinion here, Alex?
That's a fantastic observation, Philip, and I agree completely with your kind of viewpoint on that. The way I personally like to think about this is that there's no black or white in this case, right? There's multiple shades of gray as to how we transition from the traditional financial ecosystem into the emerging world of a global financial infrastructure, right, which is crypto, and the multiple layers of distributed applications and DeFi capabilities associated with that. The way maybe to describe it best is I think it's going to be a combination of both, right? You will see individuals start to get much wider adoption of crypto and DeFi because currently it provides better yield, right? There's better financial opportunities, although somewhat higher risk. I think the different financial climates at the global scale, including increased interest rates and increase in global prices and other factors, will continue to drive these macroeconomic movements, which is going to play a critical role. But I think eventually, I like to say that we're really in the business of building bridges, right? I think it's within everybody's best interests to make sure that the transition from traditional money to the next generation of globalized financial frameworks, which is DeFi and crypto, happens as seamlessly and painlessly as possible, right? Because every time we encounter a large-scale incident, whether that be a financial incident, crypto assets disappearing because of smart contract risk, or security breaches by large players, compromising significant value, that hurts everybody within the ecosystem, right? So it's within our collective best interest to make sure that the seamless flow of capital from traditional markets into crypto markets is as painless as possible, both for the retail investors and the retail consumers of these services, as well as the financial institutions that want to continue to participate in the ecosystem.
Yeah, interesting point. Anybody wants to add something here? Maybe Daniel, Alexander, or Rudy?
Yeah, definitely. I think I'll jump in real quick. So I really subscribe to what Alex has shared. I think that's really interesting. One point that I would like to note is that I really believe that in the near future, it's really about becoming and building a parallel financial system. And what I mean by that is, if you think about it, sometimes when you travel overseas or you travel to a new country, you could pay someone in cryptocurrencies, you could pay him in digital assets, but you could also take out your MasterCard and Visa card and actually pay that person. So what we would see is really this dual financial system that kind of like serves the purpose that Alex has actually mentioned. And I think that's going to get super exciting. In the near future, it's going to be very complicated because as the blockchain ecosystem, us at Algorand are building all of these tools, all of this, like, working with our providers, with our custodians to provide this good ecosystem. The current financial system and the banking system is basically digitizing. So they are doing a completely different set of things that requires them to take maybe another 5 to 10 years to basically reach where we are. So that's the reality. So as both are developing together, as what Alex said earlier, a good cooperative manner is definitely going to be very helpful. Yeah.
Excellent point. Anybody wants to add something? Otherwise, we would proceed with the next question.
Just
yes, Alexander, please.
Just quickly to add from my side, I think we're always talking about quote unquote institutional adoption of DeFi, right? But really, I think it was mentioned already before, right, that it's super important to actually distinguish between the different types of institutions, right? So I cannot see more regulated institutions getting into DeFi anytime soon, right? So think about, I don't know, a German insurance company or a German pension fund. I don't think that they will be getting into DeFi anytime soon. But when we talk about less regulated institutions, so I think they were also mentioned before, family offices, endowments, right, private corporations, I think those could really be getting into certain DeFi applications in the near future, right? So think about the more, let's say, conservative applications of DeFi. I don't know, such as stablecoin lending, for example, on the big renowned protocols, right? This could be a use case which, could be very attractive for those types of institutions very soon.
Yeah, interesting point. Yeah, and also talking about institutional demand, we heard previously from Rudy that there are hindering factors for adoption, like hurdles. Rudy mentioned, for example, AML issues, reporting issues, taxation issues. They are country specific, by the way. So we know that in a couple of legislations, taxation issues are a little bit clearer, and Germany is here not a very good country for institutional taxation. I know this. Then we have custody issues, right? That have been 4. What further issues are there besides reporting, taxation, custody, and AML mentioned previously? Any more factors?
Yes, I would like to stress on the fiat point. So with CeFi, you can always clear out positions, and it has easier access to fiat, and it's better. It's more user friendly in terms of cashing out to fiat currencies, whether it is euro or United States dollars or any other fiat currency. And that's something on DeFi which is not possible as much. Also, as kind of other obstacles, user friendliness and the complexity, this point was tackled before. Customer service, that's a point also where institutions, or now I think the distinguishing of institution is now critical at this stage after what was discussed earlier. So traditional regulated institutions, customer service, and user friendliness, complexity, those are main criteria which they look upon. Also, for example, Alex pinpointed a huge point, which is important: stable coins, lending and borrowing. So as long as this service is also offered on CeFi, I think institutions will keep on doing it until the interest or the yield is way more competitive on DeFi, then they will start considering it. So it's also important to note that CeFi and especially emerging exchanges are offering a lot of services which are helping to modify the balance between the pros and cons of CeFi and DeFi. So
one question I just came to my mind is, at this point of time, DeFi heavily relies on the US dollar, right, as a base currency unit, right? So is there, the absence of a euro stablecoin, is this also a hindering factor in Europe? That people have some cognitive issues with a foreign currency to get into this ecosystem.
Sure. And thank you for mentioning this point, because that's what we are trying to tackle as a Bankhaus Hash. So we know that the liquidity is available in crypto, especially with USD. However, in euro, it's not the case. We are also aiming on both the crypto and the digital assets to overcome this issue by quoting it with euro and making sure to provide the higher liquidity on the euro side. And also, as Bank Haushash, we also have in our roadmap to release Tradias stablecoin, which, as you mentioned, will help to bridge CeFi into DeFi and increase the liquidity on the euro side as well.
Yeah, interesting point. Then we have also legal uncertainty, for example, coming from the European Commission or the European bureaucracies, which is basically also hindering people to adopt it more easily, I guess so, right? It's basically trivial, unfortunately. Yeah. And then, as always, the topic around education, where we also see that, for example, decision makers in asset managers and other companies at this point of time very often not yet have the knowledge. If they gain the knowledge, then very often they quit their job and go elsewhere. So that's also a systematic issue where very often this knowledge has difficulties being built with regard to, large scale incumbents, right? And that, just compiling all hindering factors, all obstacles. Yeah. Any more points we have forgotten?
Yeah, so you just tackled a very interesting idea, the jumping from one protocol to another. That's something that's very, we're seeing it very frequently in the crypto space or the DeFi space, experts jumping from one protocol to another. And other than this, yes, also, I think I mentioned it before, the hacking. So I know that the hacking on a DeFi level, it's still a small number compared to the revenue and the profits being made and the turnover. I know this, but also you have the headlines are the first thing that they are reflecting is a 600 million USD hack on DeFi. So that's the thing that which investors or institution or traditional institutions look upon. Once they see something like this, that's for them as a deal breaker, and this increased the uncertainty concerning DeFi.
Yeah, I guess so, because as I understand it, decisions in large-scale asset managers are being made in committees, and in this committee, there just needs to be one person waving the red flag, saying, so, there are lots of hacking attacks going on, and suddenly the entire committee might not be as brave, sending money into the chain than expected, right? And as you said, it's also related to the education part and also system stability, right? Any more points, Alexander and Rudy and everybody?
Sure.
Yeah, Rudy, please go ahead in case you have.
No. So I just wanted to mention that those hacks also happen on the traditional world, and they are sometimes even in a more significant amount. But in DeFi, they are captured way easier to make it as a barrier to entry for new joiners. But they also happen on the traditional world, but they are more highlighted on DeFi.
Interesting point. 100% agree, and I just wanted to kind of synthesize this a little bit because to me, there's a very clear picture emerging here that it's important to try to formalize. What we're discussing here really is there is two competing systems, right? One is the traditional financial system, which has been around now for 100 years or so, and honestly, computerization, digitization has been happening for the last 40 years. It's done its work, right? There's more efficiencies in automation. So we've been able to scale the current financial system and globalize it to a certain extent. But the rules and regulations and how we approach the models themselves are still very much from the genesis of the regionalized, localized financial systems and financial markets. And then everything that builds out of that are market inefficiencies that need to be managed by technology. And on the other side, you have the new emerging crypto system, right? And that is a global system from the very beginning, decentralized by design. So there's very different systematic design elements and technical elements associated with this new model. The interesting thing is that they're just separate systems. Value is still singular. There's still only one value in the world, right? Otherwise, we'd be, driving inflation even more crazy than it's already going. We don't want that. And then really the challenge is making the new system so effective and increasing our education and making it more bulletproof, right? More technologically advanced, building the appropriate supports and tools and solutions around the new system to make it much more cost effective and much more reliable and predictable to start to move value from the one system, right, from the existing system to the new system, and make that also as seamless as possible. And then we're basically going to start to drive adoption forward. But there, to your point, there's multiple challenges that need to be addressed. One of them is regulatory. But fundamentally, we just need to build a better model, and that's really what we need to focus on. And that's, as Ledger, that's what we fundamentally do from a security and a technology perspective, making sure that the DeFi and the crypto ecosystem, as complex and quickly moving as it is, maintains a level of security, a level of compliance, and predictability in operation to basically present itself as the better alternative, right, between the two systems existing and future.
Yeah, interesting points. I would like to raise a point which has been addressed earlier. Would permissioned DeFi be the system, the solution, right? And the related question is, permissioned DeFi would basically the same like enterprise blockchain solutions, which we have heard 5 years ago, right? Where's the difference? It's about smart contracts running on Hyperledger, but the money was missing because at that point of time, nobody thought of deploying a stablecoin on Hyperledger or R3 Corda, right? Funded by 100 million, and somehow it's gone, right? So is permissioned DeFi the solution, or is it basically old wine in new bottles? And it was previously called enterprise blockchain. Now it's called permissioned DeFi. But of course, there's a difference between because the underlying infrastructure might be now public chains, not enterprise chains, right? But do you think permissioned DeFi solutions will be the solution for these points we just addressed? Who wants to take this question?
Go ahead, Daniel. I have a provocative concept to mention here, but please go ahead.
Yeah, for sure. Yeah. So maybe I'll share really quickly, right? So Algorand's a public blockchain, and one thing we have been building is really to really empower the community. So what do I mean when I say community, right? It's really the people actually. It also includes the enterprises, it includes the CEOs, includes the MDs of financial institutions, etc. But what gives really blockchain the fundamental strength and across all verticals, right? DeFi, etc. It's really the community itself. That's where the value is at. So when permission DeFi is brought in, I think Philip, you really kind of like hit the nail on the head, right? In terms of like 2018, 2019, when enterprise blockchain was introduced. But I really think that there's kind of a difference right here, in a sense that permission DeFi, even though it represents a closed community, it might interface with other systems actually. So there is a payment system, an international forex market that's really big, trillions and trillions of dollars flow through it. So when the community it's big enough, even within a community, like even within a gated community, that can actually result in something actually. So that's where when you talk about DeFi, right, it's really interesting because everybody in the world literally handles money. Like in my hands, I have cash euros, and in the bank, I have digital euros held in Deutsche Bank. So it's very interesting actually. So Alex, back to you.
Well, you don't have digital euros because they don't exist, but you could have. In the US, you have digital dollars, basically called stable coins, right? Yeah, that's a very interesting point. Anybody wants to add something on this point?
I want to throw a little bit of a controversial point into the discussion here. What if we said that the distinction between permissioned and permissionless isn't a thing, right? It doesn't exist. It's an artificial construct. The real difference between permission and permissionless is a question of scale, right? Because frankly, permissionless networks like Bitcoin and Algorand and others are very well designed for peer-to-peer permissioned interactions. All you need to do is have a shared whitelist, right? So you can take any of these public networks and create an enclosed ecosystem within them just by sharing a whitelist. Very simple. Now, we're used to walled gardens of several large banking institutions globally. Majority of the money in the world moves across maybe 5 different financial institutions, right? A very high lopsided percentage, right? Global banking providers. Now, let's say that's a network of 5 major banks. right? We would view that as a permissioned closed network, right? But you take that same model and you say within that context, you no longer have 5 banks, but you have 7 billion individual accounts. Is that still a permission network?
Yeah, interesting question. Yeah, anybody wants to add something here? It's an interesting point. We have gotten a very interesting question from the audience on YouTube, and the question is the following. You are all talking about institutional adoption, including banks, but is there really a role for banks in DeFi, also not just banks, but generally speaking about centralized institutions, or is this rather a hopeless discussion because we're talking about decentralized finance, and this paradigm, this kind of movement will replace centralized intermediaries at that point of time. So does this discussion make sense, and is basically the role of a bank redefined, and are banks basically required in this DeFi future? Any ideas here?
Yes, so I would like to answer concerning this point. So you can look as a traditional bank, but we also are willing to participate in this innovative DeFi world, and we can participate also just like as a normal bank. We can be from the liquidity injection side. We can also participate on the market making side, on offering those liquidity pools for trading on secondary market with very robust and functioning platforms. We can take the good things with DeFi and also offer them to all kinds of institutions. But we do not look at DeFi as a replacement for what we do, especially from market making, over the counter trading or prop trading. We are looking at the DeFi as an innovative solution, which we can also participate in and help our institutions to leverage the services out of DeFi. Sure, you can land and learn on DeFi, and you can also do the same on CeFi, and all of the banks they do so. But you can also participate in either sides of the lending or the borrowing as a bank on DeFi itself. So we do not see any barrier to entry or any conflict of services between DeFi and banking services.
Yeah, but Rudy, you are now speaking on the behalf of, let's call it a B2B bank, right? Your customers are corporations, right? So maybe your answer would have been different in case you would be a retail bank.
Of course. I answered just to make it the clearance between what I said earlier and based on this question that was received, to make the clearance about what we do and how DeFi can be leveraged in our case.
Yeah, it's an interesting point. Yeah, because
as a commercial bank, of course, I would agree that DeFi would overcome most of the service offered.
Yeah, but you also have the regulatory bodies who are demanding the presence of banks, right? We had the unhosted wallet discussion in Europe and so on and so forth. Who wants to add some points here about the role of banks in the future?
Yeah, I think just something from my side really quickly. I think in an ideal world in 10 or 20 years, if mass adoption of DeFi really continues to accelerate, and if people are actually willing, right, to self-custody their funds, then I could really see a scenario in which some of these DeFi protocols will actually partly substitute the business that banks are currently doing. But I'm actually thinking that, we're not living in an ideal situation, right? Or an ideal world. So I think also in the future, people will, well, not everyone will be able to actually have a non-custodial wallet solution, right? And some people, or maybe the majority of people, will still depend and trust a bank with the custody of their crypto. So I think this is the place where banks are or will evolve over the next couple of years, or hopefully will evolve to stay this trusted party that they are currently, they always have been. And I think banks will partly be responsible for the custody rights of crypto assets. So I think this is the role that banks will be taking on in the future.
And also demanded by governments' rules, of course, right? It's basically an additional function. So I think the future of DeFi is in my mind interesting, because if you view it this way, also including the role of banks, then you could also see that, for operating worldwide capital markets right now, you have dozens of countries. They all operate partly an international, but also partly an international and national capital market consisting of hundreds of banks and hundreds of intermediaries. But in a DeFi world, in a very extreme thought, you just need 1, 2, 3, 4 layer 1 solutions and a couple of protocols which are organizing the entire worldwide capital market, in a very, very, very extreme solution, right? Would you agree with this statement, or is this a little bit too far-fetched? Yeah, basically the entire worldwide international capital market just made of a couple of protocols running on a set of layer 1s.
Yeah, so maybe I could jump in real quick. So I think you mentioned something that's really interesting, and I would like to kind of like bring up what Alexander has shared earlier. So it's like how blockchains are kind of like interoperable. In the near future, what's going to happen is that there's going to be at least 5 to 10 dominant blockchains, and all of them will be providing different types of services actually. So for Algorand, we are very, very focused on financial services. So one thing that's really important to realize into the near future is that when developers are choosing to work on certain layer 1s, it's actually not exclusive. So a developer could build his entire business, or a bank could select Algorand, for example, to build their entire CeFi, DeFi ecosystem on. And another bank, maybe somewhere in Asia, could actually do the same thing on Ethereum, actually. So it's not a question of either or, but it's really, the being interconnected. Which blockchain is able to connect to more other blockchains, provide the best developer tooling, for example, that can actually help with this issue. So to that extent, I think I do subscribe to what you have said. It's really going to get super interesting over the next couple of years. And one major focus that's also extremely relevant is it's whether a blockchain actually burns a lot of carbon, right? For example, so on Algorand, we're actually carbon negative actually. So to that extent, it's something that a lot of people are thinking about, especially in the ESG space. And when developers are choosing in the current zeitgeist, right, I think that's also highly relevant. Yeah.
And but Daniel, how is your stand? This is also one question coming from the audience, right? How is your standing in the DeFi world when you compare Algorand, for example, towards other chains like Binance Smart Chain, Ethereum, Solana, and Polygon? Do you have specific focus areas on how to, gain market share in this domain?
Yeah, 100%. So one thing that Algorand has is Algorand, it's basically a DeFi ecosystem that's actually in the growth phase actually. So unlike other chains like Ethereum that has been around with their smart contracts for DeFi in the past 2 years, Algorand is actually relatively new. So our DeFi ecosystem is actually kind of like a baby actually, like 4 to 5 months old, and we are actually growing. So in terms of the DeFi building blocks, we are actually on the first to second layer, moving forward towards the higher levels actually. So it would definitely take some time for us to be comparable to, for example, BSC, Avalanche, etc. But the building and the growing phase is the same for everyone actually, because you can't just launch a DeFi ecosystem without any AMM, for example. You also can't operate if you don't have, for example, a DEX aggregator, and that's something that we are cognizant of. Yeah.
You need stable coins, right? So there are stable coins on Algorand, but it's something which, for example, has been missed in former times when we talked about Hyperledger in R3. A follow-up question would be, maybe Daniel, you have an opinion here, but maybe also the others. We see that in the States, regulatory clarity is missing here and there, and this might change in the next 1 or 2 years. And the SEC has basically said, that Bitcoin is fully decentral. That's okay, but many other tokens might be securities. How do you think will this unfold in the US? Will there be more clarity in the near future? And what type of rules could you expect to come in the US here?
Yeah, so maybe I'll jump in real quick. So for regulation clarity, I think it's really the same. It's not just the protocols that are ones that's suffering actually. So the custodians, the banks, even venture capitalists kind of like struggle with this. So it's actually a shared thing across different layers, across different businesses actually. So as an industry, I think it's important for us to continually invest in kind of like educating our legislators, basically our lawyers, our Congress people, and making sure that, hey, these people are kind of like cognizant of what's happening in this space. So that there is a traditional thing that a lot of people say, right? You are usually afraid of what you do not know. So by kind of like getting the education out, spreading the news, sharing more about how blockchain and cryptocurrencies work, I think that will really help with the regulators actually.
Yeah. Then with this, we are back to education. Alex, you want to add something?
I have to agree with that 100%. I think education is paramount. I think, the regulators need to really understand that this is a technical revolution. This is technology driven fundamentally. And maybe to draw a little bit of an analogy to what happened with the web, right? And the proliferation of information, right? And the associated issues that you have with digital rights management and copywriting practices, right? All of this pain that we're kind of experiencing now is how do existing laws deal with these new emerging capabilities from a technical perspective. We've seen this before, right? DRM was a very big pain point with the music business, the streaming video business, right? We're still seeing a lot of this happening as far as, trademark management and copyright law, right? Distribution of information and content had the same types of issues with the emergence of the web. Now we're seeing this kind of what we're experiencing with DeFi, right? We kind of call it Web3 has started to pick up momentum as a term, but it really is the same thing we did with the standard web to information is happening with DeFi to finance, right? And it's the next generation of that. And I think a lot of the practices that were implemented with web neutrality and the regulatory frameworks around that can be actually applied in this space. We just need to make sure that there's clarity for the regulator, that the governments are properly positioned to observe and manage these things. And I think I also wanted to connect the dots. It brings us back a little bit to the banking discussion, right? So banks have always provided value-added services. That's not going to change, right? Even, a bit of a rudimentary example, but even something like Lido, right, pools individuals' capital to invest it more effectively into staking capabilities, right, to create better yield generating aspects to its users, right? That's what traditionally a bank does. They pool capital to more effectively invest it because investing is much easier when you have larger resources. So it's mutualization of cost and capitalization of benefits. Like these things will continue to exist. So banks will continue to play a role. The difference is it's really technically driven. What Ledger, for example, has done with the hardware wallet, right, is make it cost effective for an individual to manage what used to be effectively a considerable amount of cash sitting under a mattress, right? Before you gave that to the bank because they had all the security constraints, hired personnel, security practices and resources to be able to safekeep that cash. Now you have digital assets that you can put on a device that costs you, very little compared to the assets that you can secure with it. And we're going to see the same type of model in the B2B space, right? It's my job and Ledger Enterprise's job to make it as cost effective as possible for institutions to manage their own crypto treasuries, right? And to the extent that that becomes cheaper for them than managing their traditional treasuries, they're going to shift. So some of the B2B banking customers will do direct to crypto using our platforms, but that doesn't mean that banks cannot adapt that same technology and the same capability, bundle their value-added services, and then continue to sell that package to your current business customers, right? And we'll be more than happy to be part of that equation as a technology provider.
Yeah, good point. And with this, I think we are also very soon closing the session, but I would like to touch upon a very last aspect. Imagine there are people now listening who are graduating at a university or who are maybe also still during their study programs and so on. So do you see opportunities for them in this space? Well, I guess yes. But what would be your advice to them? Yeah? Should they learn programming? Should they start working in any random crypto company? Should they go to a protocol? Should they stay in education and learn even more, and so on and so forth. What would be your advice for young people? Maybe, just as to be very clear, people graduating right now. Alexander, you are the youngest here. What's your opinion?
Yeah, of course, join the Frankfurt School DeFi Talents program, right? That's step one. Now, I think, especially in this space, there's just so much free educational material online, and you can find, whether it's, I don't know, YouTube or articles on Medium, or I don't know, crypto Twitter. So I think if you're really interested in this space, you should just go online and just read as much as possible, right? There has not been many programs from, I don't know, universities or nonprofit organizations so far, but I mean, the space is really new. And I think it's great what you guys have done at the Frankfurt School, now launching the master's program as well in digital assets. But I mean, just go online and do as much reading as you can on this topic.
That would be also my advice. Invest as much time as you can as soon as possible in this entire domain, and do not wait for anybody, right? Nobody will teach you in the far future, right? So you have to do this yourself, and you better do it now, and with a lot of time investment, instead of doing it, as a side business. I think the topic demands quite investing a hell lot of time, right? And it will be worth it. Alex and Daniel, you want to add something here? Rudy?
Yeah, I would say just very quickly, diversify your viewpoints. We live in a globalized ecosystem, right? You can obviously read up on the space, learn as much as possible, definitely look into programming, but fundamentally diversify your viewpoint, expose yourself to different global trends, try to understand them from a personal viewpoint perspective, because that'll start to paint a much cleaner picture of where to focus.
So focus on DeFi and Bitcoin.
Exactly.
Okay, Daniel, Rudy, any advice from you?
I also want to emphasize on the programming point, which is very critical in crypto, and that we are always hiring and recruiting for talent, experts in crypto, and we're also open for motivated people which are willing to learn more and more about crypto and digital assets in general.
And Daniel, you have the last word.
Yeah, 100%. And just to add, like, for our friends that are not technically inclined, you can also kind of get a similar experience by serving as a business analyst. That's also a pathway you can pursue, and I think that's really important, because at as much as we would like and support our developers, you also need to have business people kind of running and everything. I think that's really important. Just jump in head first, be courageous, have the courage to try something new. And like what Alex said, always keep your mind open. That's super important. Listen to all the viewpoints. Yeah, that's all.
Yeah, I think just to point towards Daniel, what has been said by Daniel. I think you're right, Daniel. You do not necessarily have to be a computer scientist, right? I think you have to understand, at minimum, the concept of smart contracts. That's the minimum what you have to understand. But you do not need to be a computer scientist by education. It might be good, but it's not an urgent requirement. Okay, I think, thank you for attending here. Thanks for being here. I think it was a very, very good discussion on everything relevant on a higher level in the area of DeFi. And with this, thanks very much. And everybody, please have a nice day and a nice rest of the week.
Thank you.
Thank you, you too.